Good afternoon, everybody. This is Mark Lambert from Davis Pendulum. I'm going to be away tomorrow. I've got some personal business I have to attend to, so I'm just going to replay this day. I produced a video earlier this morning, but just because of the ensuing action, I'd like to go over how to project Fibonacci projections forward throughout the day. That way, it'll kind of give you a rundown of how a whole day is played out, how to move Fibonacci projections around, and finding all kinds of support and resistance area for you to take trades off of. Let's get right down to it. I'm going to be taking a look here at the Russell 2000. I'm going to shut this one off right here for a second. And if you take a look at the earlier video that I produced this morning, at that point in time, we had struck this first Fibonacci projection. This first Fibonacci projection, especially when it's moving into the opposite direction, is always one that has a lot of importance. It may have some importance for probably a couple days worth of time, since we're dealing with very short-term time frames as day traders. So basically what I do is once I set up that projection, I know it's good. I just usually color it red, and I just keep it on the chart all the time. But the first video I showed this morning, we had maneuvered ourselves through this first wave, this second wave, and then we were up to this level, and then I said, well, here's another long that I took at this point in time. And the reason why I took that long was, we had come up to this level right here. I'm going to throw on another small Fibonacci projection here, just so you can see how I use them. We had, I believe, this one on here at that time, looking at 3 points. And the market had been using this as a price ladder to get up to that point where, it was just a successive series of higher highs and higher lows. And finally, once we reached this point, if you take a look at the market internals also started getting choppy and moving sideways to down, which is alerting us that this is going to be some type of correction. So this would be a good spot where you close out a long. What you want to do at this point in time is that what I do with Elliott wave intraday, any count of 7 waves is considered a fully corrected wave. That's where you really can't determine exactly what happened. It could be an ABC zigzag plus an X wave and maybe an ABC flat. In this case, it looks like a double zigzag. But what you do is you count the waves. You got 1 wave, 2 waves, 3 waves, 4 waves, 5 waves, 6 waves, 7 waves. You're pretty much at a 38.2 also at that point in time. So at that point, you're looking to get up long, but you're not sure yet. You see the market comes back up, comes back down, and now it's formed a secondary high or low, also exactly right on the 38.2, which is alerting you that the market's getting ready to move back up again. Also, at that point in time, you start to see this type of action, where it's also formed a secondary high or low, and you're going to see the market's going to be wanting to move back up. So what we do now, since we have another first inflection, just like an electrical engineer, we're going to use the Fibonacci projection tool as like an oscilloscope so we can gauge the move of the market. So what you want to do now is you set your tools, set your scope to measure the internal wave oscillations that are happening in the following wave. As you can see, you throw this fib on, the market basically used this as a price ladder once again, knocking back and forth between the levels. So finally get up to this point right here, which is a 316.2 Fibonacci projection. Actually, it's not a Fibonacci projection. What that is it's the square root of 10. At this point in time, too, we take a look at our internals, which you should always be tracking these throughout the day, intraday. Take a look at the time here. It's about 10:40. Yeah, so you get this little oscillation right here. It almost looks more like it's just consolidating, looking at a move off the day. But either way, close out your trade because you see a little bit of weakness coming in because we don't know how deep this weakness is going to go. It could have came down to here for all we know. So basically, you close out. You know the day is moving along also by the advances and decliners are moving up. The Fibonacci projection is being used as it's moving forward. So you're pretty safe that you're going to be moving up But the thing is, I want to find another place of support to get back long again. I would rather make a portion of this, sit this out, make a portion of this, sit this out, make another portion of this, sit this out. And basically you can see that the market came down and supported perfectly on the 100% Fibonacci projection that we had set up in the morning. And also at that time too, we also saw the internals were also starting to strengthen a little bit. And then they started taking off. Any move has to be confirmed by the market internals. Without the market internals, that's the engine that drives the market. But the move is not just going to, it's not going to happen. So here we go, another small correction. I like to continue moving my Fibonacci projections up, measuring each successive wave. That's what we're doing here. And you can see that the market did use this as a price ladder, also moving back and forth, bouncing between the levels as support and resistance. And I did take this trade here at this point in time. But the thing is, I didn't take this trade because it was on a Fibonacci level. I'm going to blow this up a little bit here so you can see why. I'm always looking for something to move in 5-wave moves. What we have here, we have wave 1 up, wave 2, then I could consider this wave 3, and then we have this sloppy sideways moving consolidating pattern, moving back down again. Let's count the waves too. 1, 2, 3, 4, 5, 6, 7 waves again. Fully corrective move. We're in our 7th wave. I do not want to see this level get breached into this. To keep a really strong impulsive pattern. As you can see, this level is 816.5. We came down to 816.5. The market support and started to move up again. At this point, larger degree correction again. I want to measure the internal oscillations of the next wave. So that way I have good support and resistance areas to enter and exit the market. At this point, this is also a very safe trade to take, because you know that if we go into this territory, you're wrong. So I had my order set right here at this level. I had it set at 816.5, and I had 3 tick stop loss on it. So if I lose anything, it's very, very little. Now that you see that the market just keeps moving up again, I'll get this a little bit of a blue out. Yeah, so you can see the actual action here. You can see that the market was using this progressed projection level of support and resistance again in a smaller time frame that just kept continuing up. And we hit this 200 that we struck earlier this morning. One reason or another, just because I've had so much experience using these bid projections, I knew that the market wasn't going to go past us. It's just the fact that the market was starting to slow down. It's getting close to the end of the day. I don't think people are going to want to be racing to buy at this point in time. Basically, I am now flat. I went flat probably right around this level right here. I figured myself I did very well today, so I might as well just stop, keep the profits, and just watch, see what happens. My expectation would be now that we would probably do some type of pullback, and that pullback may support on this red grid. And if this can be confirmed, the next move would be I would set my projection level right here, this top, and I'll get this first wave down here. Let's see what the market's going to do. Where it's going to go to on this. As you can see, also that since I projected down now, you can see that the market is using these levels right now as support and resistance, moving down. I may have to progress this a couple more times before I can find the bottom. But initially, we would be looking with the support on this red grid somewhere before we move back up again. So, it could be a trade that someone can take on tomorrow morning or in the evening. But that's basically how I would just keep projecting the day forward. As you can see, the price ladder works out very, very well. You need a little bit of experience with Elliott Wave to kind of gauge this, but it's not, you don't have to be an expert. You're just going to learn to have a good observation skill to see where things are going. And this will be my last video. I'll probably put up another one maybe sometime this weekend. But being busy tomorrow, I'm not going to produce anything else. And on Friday, it's going to be a long weekend, Memorial Day weekend here in the United States. Probably won't trade much on Friday either. If I do, it'll probably just be in the morning. So I just want to wish everybody a great weekend. God bless, Godspeed, and good trading for everybody.